Welcome back to Turning Hard Times into Good Times. I am your host, Jay Taylor, and I'm really glad to have with me once again John Walter Williams. Economist John Walter Williams lives out and around San Francisco, and I just think he's the luckiest man in the world for that, an area, a city that I love so much, and we have a son that's out there, so we got to get out there. But in any event, I want to tell all of you to go to shadowstats.com for John's work. There's a lot of very important stuff there, a lot of great charts and a lot of great information. Most importantly, John provides a way of looking at economic statistics that are, I think, based more on reality than what you're getting from the government all the time. And so welcome, John. Thanks for joining me again.
Thanks for having me, Jay.
Always good to talk to you. First of all, just for those that may not be familiar with you, I think most of our listeners are, but some probably are not. You see the unemployment numbers as being quite a bit higher than what our government's numbers are. What are your latest alternative unemployment numbers look like, and how do they contrast with the government's? Just tell us that. And then I want to tell people to go to Shadow Stats to understand more thoroughly the methodology of John's work. But go ahead, John. What are you seeing in unemployment now?
Right
what are
now,
the numbers?
Our numbers at 22.9%. That's against the official headline of 4.9%. The difference simply is that we count everyone who, let me put it this way, if you went around and asked everyone if he or she were unemployed, you'd get a number a lot closer to ours. The government does not count people who haven't been looking for work recently, even though they consider themselves unemployed. Mm-hmm. So we're way out of it's much higher than the government says.
Okay, 22.9 to 4.9, quite a difference. And then on inflation,
the government has an alternate rate of 9.9, which is their broadest measure. So
yes,
they know that there's more out there than the headline number.
Right, but I think that goes out to those that stop looking after 6 months. Is it?
After 6 months, if they've given up looking for, they have to have looked for work in the last 6 months.
I see.
To be counted, in the last 4 weeks, if to be counted in the U3.
Oh, okay.
The headline number. If they give up looking for work, they're counted so long as they have looked for work in the last year. They're put into a short-term discouraged worker category. After a year, they just drop out of the numbers.
Okay. All right. And John, your methodology, your alternative methodology, is explained at Shadow Stats for non-subscribers, right?
Right.
Okay, let's go to the inflation numbers. Your inflation numbers are substantially higher than what the government says, and that is very important because if inflation is much higher than the government's, then the real, let's say the lifestyles of people are suffering very dramatically, and I think that is probably being borne out perhaps in the political season here with Donald Trump and Bernie Sanders gaining so much foothold. So what is your inflation numbers telling us now, and how does that contrast with the government's numbers?
Well, generally, we're looking at something that's 3.5 to 7% higher than the government's official rate, and that's only because of the changes that they've made in the methodologies over time. They used to count the inflation from the standpoint of measuring a constant standard of living and also measuring what you spend out of pocket. You don't get that anymore with the headline numbers. The headline numbers are designed by the government to minimize their budget expenditures, such as cutting cost of living expenses for people on Social Security.
All right. So now, what would we be looking at GDP if we took your numbers? I think the last I looked at one of your charts, it shows that we've never really come out of the recession following the financial crisis. Is that right?
No, we haven't. If you look at the headline GDP, it is adjusted for inflation, but they underestimate the inflation that the GDP is being corrected for. If you understate inflation in those calculations, you're overstating the growth. I figure the GDP's understated. The inflation there's, understated by 2%, which basically shows a pattern of economic collapse into 2009, and then a low level of stagnation ever since. Same thing you see with the housing numbers, and I'll contend the economy's never recovered. There maybe is a little uptrend in the stagnation, but now we're turning down again. And that's got all sorts of negative implications for the system.
Well, I noticed that, Geo, around the world, in fact, I think they said, I saw last week, the first time, I guess it was maybe it was during the month of January, the first time we've seen global trade contract since 2008 or 2009, something like that. So it's not just an American phenomenon, it's a global phenomenon, right?
It is, but the big problems in the United States, because our circumstances have been overstated on the positive side, and we're effectively bankrupt with, one other number to look at there is the federal deficit. But if you look at it in terms of including in that, on a generally accepted accounting principle basis, the unfunded liabilities for Social Security and Medicare, you see total net federal obligations in excess of $100 trillion, and there's just no way that can possibly be handled in the normal course of business for the United States. So ultimately, it means a very high inflation to liquidate that if the government can't bring it into a proper fiscal balance. And nobody's, we'll see what happens with the current electoral process, but certainly no one in the existing system has made any serious effort there.
Yeah. Well, it certainly seems the case. Now, the idea, what you're talking about, John, is hyperinflation, and all that we're seeing is the central bankers trying to increase inflation because they say, "Oh my goodness, we have this horrible deflationary problem." Of course, if they were looking at your inflation rates, they couldn't make that case at all. But they try to get a 2% inflation rate, and they're grunting and groaning and trying to push money into the system and cannot get it. Your case for inflation, for hyperinflation, has always been based on the premise that ultimately the confidence in the dollar would collapse. Because after all, there's nothing behind the dollar. There's no gold. There's nothing of substance behind it. It's just a con game. It's the notion that you can convince people that the dollar is worth something, right? Well, what will turn that around? What will make the dollar collapse, and therefore, in terms of our currency, our dollar, the price of everything go up?
Well, you have to keep in mind that in the last, it's almost 2 years now that the dollar has been rallying generally very sharply.
Mm-hmm.
That has been artificial, and with the dollar's rally, you've also had a collapse in oil prices. The two are closely tied to each other. And the collapse in oil prices has kept the headline inflation down, at least in dollar terms. It would be much higher without that. If you see a collapse in the dollar, oil prices are going to spike, and you'll start to see a spike in commodity prices as well. The problem for the dollar is that in terms of our fiscal circumstances, relative to the rest of the world, we're the worst around, and we're also the largest around. You look at our economy. Our economy is weak and faltering. Our interest rates are going to go, they're not going to go any higher for a while, and you're going to see the Fed moving most likely back to some form of a quantitative easing to debase the dollar to try and keep the banking system afloat and to fund the Treasury. Now, the reason you've seen the dollar's strength, initially, I think that was there was a covert action there to try and punish the Russians for their activity in Ukraine.
Yeah.
If you look at the timing of the collapse in the oil prices and the big rally that took place in the dollar related to that, it was within a day or two of the U.S. announcing sanctions against some of the Russian leaders. This has been orchestrated to a certain extent. How did the rest of the world justify supporting the dollar? Well, one thing, basic fundamentals, higher U.S. interest rates. All of a sudden you start getting these rumors, the Fed's going to eliminate its quantitative easing, it's going to raise interest rates.
Yeah.
And we had that song and a dance for a year and a half, and then they finally raised interest rates. But whenever the dollar came under pressure, the Fed's going to raise interest rates. Well, they did raise interest rates now, and then they were going to continue raising interest rates. But as the economy's weakened, a lot of that talk's disappeared. As the crisis resurfaces from 2008, and 2008 was effectively a day of reckoning. All the excesses in the system, both domestically and globally, had come to a peak, and we were literally on the verge of collapse of the domestic banking system. At that point in time, the Fed, the Treasury did everything in their power to keep the system from collapsing. They made a decision at that point in time they would not let the system collapse. They created whatever money they had to. They bailed out whoever they had to. They guaranteed all deposits. Anything they had to do to keep the system from collapsing, they did. The only thing they didn't do was take fundamental action to address the issues that had led to the crisis.
Right.
We still have the fiscal imbalances. We still have the economy in severe trouble. And the banking system is not in really great shape, although it's in better shape than it was at the time. So as the economy weakens anew here, you're going to see intensified pressure on the banking system. You're going to see intensified pressure on the deficit. And people look at the quantitative easing really as a bailout for the banking system. It did nothing to stimulate the economy. But it also helped the Treasury fund itself. In the period of time where they had the active Treasury buying, they were they monetized 75% of the effective issuance of the public debt.
Right.
They're going to have who's going to be buying the Treasuries now?
Well, that's what I wonder. And to what extent, John, do you think the pressure and the idea of raising rates might be because they know they got to try to get somebody else to buy our debt? Is that part of it? Do you think?
Possibly. Well, it's been to keep the dollar strong, I think, more than anything else, and basically to return the system to normalcy. But the system can't return to normalcy because it was the crisis was never resolved. We're still living out the collapse of 2008, and where they made the decision not to let the system collapse. I mean, you have people talking about a great deflation here with the debt collapse and such. I'm sure you're going to have all sorts of defaults. You may have certain debt collapse, but you don't. That does not give you a big deflation. It hurts the banking system. What gives you a big deflation is a collapse in the banking system. And you go back to 2008. That's when the decision was made. We do whatever we have to do to save the system.
Right.
So you're going to see more quantitative easing. They're going to be creating enough liquidity. Funding of the government, eventually it works out as an inflationary, hyperinflationary collapse as opposed to a deflationary collapse. That decision was made some time ago.
So what they have to do is try to con people into believing that the dollar is worthwhile, to hanging on to it as long as they can, or else, the whole fiat currency, global fiat currency system collapses, I guess. But what do you make of it, John? This year, gold is showing quite a bit of strength, and it's rising relative to silver. It usually, from what I've seen in the past, that usually suggests that there's some stresses in the banking system. Do you think that's what's heading our way now? And at what point then? I mean, what I'm trying to get my head around is what causes the confidence game to end in the dollar? What causes people to understand what you know and I know, that the dollar is a worthless figment of our imagination?
Well, the rising gold price, I fully believe, is growing recognition of the basic insolvency of the system and of the fiat currencies. That is, you may have ongoing interventions and from the central banks trying to knock it down, but clearly the sentiment's moving in that direction, and you have a circumstance here where what kills the dollar is what's already beginning to unfold, and that is a new recession. Everything here has been predicated on, yes, the U.S. is recovering. If you believe the GDP numbers, it's 10% above where you were before the economic collapse, but you don't see that in any other series. The housing numbers are all down 30-40% from their peaks. And if you look at things such as industrial production, manufacturing never recovered its pre-recession high. And you make a little adjustment for understated inflation, you'll see that generally you're seeing the same patterns in the broad economic statistics as you see, let's say, in the the revenues of the S&P 500. Now,
right.
You have to keep in mind that with how the corporations have responded with gimmicks as well as the government. All these buybacks reduce the number of shares. So when you look at earnings per share, or revenues per share, that's all inflated because the denominator is much smaller. There are fewer shares.
Sure.
But if you look at the aggregate sales of the S&P 500 and adjust it for inflation, you're down year to year. You're seeing a pattern that shows a deepening recession.
Right. Well, John,
we're going to sure a recession.
Well, John, we're going to have to let it go.
That's going to kill the dollar.
Well, okay, fine. That's very, very important, and of course, nobody knows exactly when it's going to happen. I do know one thing, though, that our time is up, unfortunately. I might make a note that it was Martin Wolf in the Financial Times, I think last week, who had a headline in his editorial about helicopter money not being far away. So, John, I would imagine, when, at some point in time, people will realize that the emperor is wearing no clothes, and it will be game over and lights out. We only hope and pray that it isn't a sudden process, but knowing how hyperinflations have happened in the past, very often they are a very sudden event, because all of a sudden when confidence is lost, people get rid of their dollars and try to buy things of value, of tangible value. So, well, anyway, John, thank you very much for being with us. We'll hope to do it again and get an update from you sometime in the near future. Thanks so much
Thank you, Jay.
for being with us.